Hey, what's going on, everybody? Welcome back to the channel. So today we're going to be talking about Tesla. We're going to be talking about Tesla before their earnings come out. Today their earnings actually come out after the market close. So specific time, it's like after 1. Where I am, it's after 4. So if you're new to this channel, feel free to like and subscribe. We love to talk about money, love to talk about investing. We like to talk about finances in a way that you can succeed no matter wherever you are. So if you have money or if you don't have money, we like to show you how you can win. So Tesla, the big news, earnings report. I'm sure if you're on YouTube and you're watching anything around stocks and investing, you've seen a lot of people talk about Tesla around its earnings report. So I guess it must be pretty serious, right? So it depends on how you look at it. So let's have a conversation. So for some people that are looking for a short term, they're looking to make some money quick with Tesla on the short term, then these earnings reports today are huge because it can sometimes give an indication of what you should do. If you should buy some real quick or maybe you should sell it real quick. Now, if you're investing in Tesla for the long term, then this earnings report virtually doesn't mean as much. However, it's pretty cool to tune in to see and to listen and see how things are progressing or if it isn't progressing. Now, personally, I think what we'll see that Tesla has had some, more production, and they've also made more revenue than their last quarter. It's very possible, especially with the people becoming more, comfortable with buying, an electric vehicle. And just Tesla alone, their product is doing fairly well, so people have gotten more comfortable in buying one. But here's the thing about earnings reports, and one of the things we have to understand. So let's use Netflix as an example. Netflix just had their earnings on yesterday. And currently right now, the stock is down quite a bit much. Like at the recording of this video, the stock is down like about 20-25 bucks in the pre-market. Now, here's the thing about it. Netflix actually, did pretty good with their revenue. They made a profit. However, their subscriber ad, meaning the people who were, buying or becoming new customers, they didn't necessarily beat that expectation, which is given by, analysts. So the way this thing works is people can be very funky. A company can actually succeed. They can actually be succeeding, having more revenue, having more profits, but they missed their subscriber ad and all of a sudden the stock is like tanked or just goes down some. It doesn't make any sense, but this is just how Wall Street is. But a lot of times when you look at these earnings reports, you have to decide, which side of the spectrum are you on? Are you investing for long term or are you investing for short term? Because you're investing for long term and a company is doing fairly well, then you don't lose by putting more money into the company. Ultimately, through time, you're going to make more money as the company continues to grow and grow and grow and become more of a necessity to people, right? Well, if it's short term, then, it can be a little tricky because then it's like, well, should I buy before the earnings call or should I buy after the earnings call? Because see, a stock can actually do really, really good and still tank. And so a lot of times we don't understand why. And like I said, it can be a various of different things. And sometimes it can be that you have, the short sellers, the group of people who just love to short sell the stock. And relatively when people are short selling the stock, it's a lot of shares that they're dropping off. So a stock can literally go right down. Just that easy. Does that mean that there's something wrong with the company? No, that does not mean that. That just means that people have chose to sell for whatever reason, or there wasn't the expectation that they wanted, because a lot of times with these type of stocks and just in the stock market in general, you have a lot of people that are playing more short term than you do that are playing long term. And what I mean is you have a lot of people that are looking to make more money now than you do people that are like, okay, cool, I'll worry about making more money later, or making more and more money later. Now, there's no negative against either one, but if you're doing short term, yes, you can make some money now, and that's cool. And if you're doing long term, that means that you're more projecting and pushing towards making money later. So here's my thoughts about how you play the Tesla situation. Now, obviously, if you've heard any of my videos that I've done around Tesla, I've done a few of them, maybe just a few, then you know that I am more so of a long-term investor with Tesla. I don't really play short-term with Tesla that much, really at all. There has been some instances where, Tesla has went up huge and I decided to maybe take a little bit of profit because, you don't know if it's going to go back down or what's going to happen. But for the most part, I'm mostly long-term. So I typically just add to my investments and I just let it ride for the most part. But if it has like a huge run up, then I might sell, a few shares or something just to maybe lock in some profits. But for the most part, I'm pretty long on Tesla. And so that's the way I look at it. So even with these earning reports that's coming out today, I typically don't have any intentions on really like making much of a move now, because I actually bought some Tesla when it was kind of down earlier this week. So there's no need for me to be, any emotional purchases and things like that, or buying, or any emotional or panic selling because, oh, well, it looks like it's going down $30, $40, $50. It's just more of an opportunity to buy. Or, oh my gosh, it's going up a lot. Listen, I have no emotions attached to whether it goes left or it goes right, whether it goes up or down, whatever the case is. I have zero emotions attached to it. And ultimately, you should too, because with all the information in the news and the analysts, people have expectations. So the expectations can be something like this. So let's say like we expect you to make like an extra $5 today, right? But you don't make $5 today. You make $4.99 today. But because you didn't make $5, you're such a horrible person. That's kind of how the earnings reports can go sometimes. Well, I mean, they did good, but they missed it by that 1 penny. I'm gonna have to let you go. You missed that 1 penny. It may seem like I'm stretching that with that type of example, but that's actually how it goes sometimes. So with earning reports, you just never know what happens afterwards. And, typically before, you never know. Because a lot of times you see people trying to buy up a whole lot of stock before. And then depending on if they know the company's doing pretty bad, you see them, maybe sell off a lot of the stock. And sometimes it can be vice versa. It's so many different motives and so many different things that you can do around particular stock, whether it's just investing in it, trading in it, whether you're doing people who do margins, which is definitely the most riskiest one, or people who are doing options around a trade. So there's definitely a lot of different facets that play into it. But typically with earnings reports, I like to tune in, see how things are going. If anything looks crazy with a company, like, oh wow, like this is devastating, then I can make the choice if it makes sense for me to remain in the company or to buy the stock. But for the most part, I just tune into earnings to just see how things are going, to see how the company is going. One of the reasons why, if there's any company that I'm typically holding as like kind of like a long-term investments, that means that I'm also part of an ownership. I might own only 0.001%, right? Or 0.002% or 0.01%, but I do own a piece of that company. So that's kind of how I look at it. And I tune in to see how's my investment doing, see how the company that I've invested in, how are they faring right now? What are their obstacles, or what are they looking to do? But ultimately, one of the best strategies to play with Tesla is to play long term. And long term doesn't mean 6 months from now. I mean years from now. Tesla's going to pretty much be doing pretty good, unless they have some competitor just comes out of nowhere and just beats everything that they're doing. But Tesla's so far down the road, it's almost virtually impossible for that to happen at any time soon, because we don't have anybody that's close to them right now. But yes, in these earnings reports, I look forward to seeing some positive news, to see that they are definitely producing more vehicles and things like that. So I'm pretty excited to hear and pretty excited to see it. However, I have zero emotions around it, and as I stated before, you should have no emotions around it too, so that way it doesn't affect your decision and you don't get caught up in the back and forth information that's out here about whether you should buy or you shouldn't buy, and then you end up making a decision and then you then regret it, or you end up losing money and all these different things. So that's how you play this Tesla earnings call. No emotions. I don't know why I can't say the word. Anywho, guys, if you're looking to start investing, or maybe you're looking for the right platform, be sure to check out the description below. I have some listed that you might be interested in. Some of them may give you a little cash for opening up an account, as well as some may give you some free stock for opening up an account. All right, guys, I'll see you in the next video. Y'all have a great one and see you soon. Peace.